Welcome to another stage analysis video. It is Sunday the 7th of January 2024. I'm going to start this weekend's video with a look at the major indexes charts before getting into the regular member content. So I'm going to start with the S&P 500 here, which had a strong rally over the last few months, 9 weeks in a row of higher closes before starting to pull back this week. You can see the percentage of stocks above their 50-day, 150-day and 200-day moving averages combined chart, which is a custom chart I do down the bottom here for the members each week. Started to pull back this week to around 64% at the moment, so still in the upper zone. Anything above 60% is what we consider a stage 2 type environment. In the 40 to 60 range is a more neutral stage 1 or stage 3 environment, and below 40% is a more stage 4 type environment. So at the moment we're in a strong environment in the stage 2 type environment, but we have pulled back to the moving average here. So this is a 5-week moving average on this one. If it starts to drop back below that, start to move into more neutral territory, and if it drops back below both, then we're back into what we consider a difficult environment. So at the moment, borderline between a positive and a neutral environment, with a pullback after the strong recent rally. In terms of looking at the rally, we can see if we break it down into two halves here, and then into a quarter at the top as well. So roughly, if we stay within this upper quarter, then that's fairly normal for when we're in an uptrend. So if it rebounds and carries on, that would be a fairly normal position to be in. But if it does start to drop down into this lower half, then it's a more severe pullback, and especially if it starts to break back down below the 50% level of that, back below the 30-week moving average through here, at that point it would be a sign of major concern there. So we did have a similar thing with the previous rally here. If you look at that in the similar kind of context, break it down into the two halves, so roughly around there, we did have 1 week where it dipped back below the halfway point of that, and it started to look like the rally was giving up and starting to roll over. We had like a single week where it moved into stage 4, but quickly reversed and regained, and then we had made that stage 2 continuation again. So at this point here, we're still a fair way off those kind of levels. As you can see, the halfway point all the way back down here around the 450 kind of area. So still a good way above that at the moment. In terms of the S&P 500, we've got a few percent above its 10-week moving average here, and still 5% above the 30-week moving average. So looking for any kind of pullback to hold this previous areas of resistance, which now potentially turn towards support again. Looking on a daily chart, you can see we're still within the neutral ranges. So what I mean by that is we've got the plus 180R level here above the 21-day moving average, and the minus 180R level below it. So when we're between these two levels, we're in that neutral range. So at the moment, still sitting in that, but if we do start to drop below the minus 180R level through here, then that would be a bit of a change of character. And so potentially this short-term uptrend that we've been in for the last few months would be starting to falter at that point. Percentage of stocks above their 20-day moving average at the moment at 59.8%, so still in a reasonably healthy position here. So anything in the upper half is a healthy position for the 20-day moving average here. When you're in a strong uptrend, you tend to hold above the 70% level for the majority of the time. Pullbacks can come back down into the middle ranges and rebound back through. So if we do start to drop into the lower half, that would be more concerning low. We look at the Nasdaq 100, very similar kind of chart action, back to those 2021 highs and rolling over this week. So strong pullback in a lot of stocks in the Nasdaq this week, with a lot of the tech stocks getting hit particularly hard. So you can see it's still in a very healthy position low again, from terms of what we look at from terms of the quality of the rally and pullback here. So still well in the upper half here, above the 10-week moving average and above a rising 30-week moving average. One of that 30-week moving average is starting to roll a little bit here. So if it can manage to hold in this upper half and chop around for a while, it'd be in a healthy position to potentially move higher still. 82% of stocks above their 200-day moving average at the moment, so still in a very strong stage 2 type position at the moment, but obviously pullback is underway in the short term. In terms of the daily chart here, you can see we're just hovering around that minus 180R level there. So we start to drop below that, then we'll be turning towards a short-term downtrend. So at the moment, still in the neutral zone, but sitting right at the bottom of that, and 38% of stocks above their 20-day moving average. So you can see the change from, we started to move out in the earlier part of November there. We started to drop back below. So this is a little bit of a change of behavior at the moment compared to what we've seen over the last few months in the Nasdaq. Similar with the Nasdaq composite, has come all the way back down to that level from back in July high. So we need to look to see if this can hold and rebound through here. Same as with the other major markets there. 46.94% above their 200-day moving average at the moment. Still in a very neutral position for this broader index, which roughly has around 3,000 or so stocks in it. So a big measure, but a lot of those are healthcare stocks. It has a good amount of healthcare stocks in it, which has been a laggard of late. So we are starting to see some of the healthcare stocks performing better at the start of the year, but it has been a laggard all the way through 2023, which has kept this Nasdaq composite moving average breadth lower than we've seen with the NYSE. If we look at the daily chart, again similar to the Nasdaq 100, we're sitting right on that minus 180R level there, so below its 21-day moving average, still above its 50-day moving average. So a push further lower here would send this into a potential short-term downtrend position, but still sitting right at previous support, so could yet rebound from this level. So 47.19% above their 20-day moving average at the moment. So very neutral position currently for the short-term moving average breadth there. Look at the NYSE. The pullback was much more minor compared to the Nasdaq stocks. We saw a lot of rotation this week into the likes of the banks and staples and etc., those kind of more defensive areas of the market, and the NYSE is home to a lot of those. So the pullback was much more minor, still holding its initial stage 2 move, which it's been in for a few months now. So still in a good healthy position at 70.31% of stocks above their 200-day moving average. So if this does pull back in, we obviously want to see it hold the stage 2 breakout area. So if it does come all the way back down to there, we don't want to see it drop much more than 5% or so. Looking on the daily, still holding at the plus 180R level, so much different to what we've seen in the Nasdaq. The Nasdaq is down at this level, the minus 180R level, so showing more near-term strength. And we have seen that. I did a post earlier in the week on the change of behavior between the value stocks and the growth stocks, and how they've outperformed over the last few months, which may have been surprising to some, but we have seen some really strong moves in growth stocks, and some of the more speculative stocks from a growth versus value perspective. Value has been outperforming since the middle part of October time, so and continuing into the first week of 2024 at the moment. Russell 2000, so small caps pulling back quite heavily this week. We saw back down to 65% above their 200-day moving average in the S&P 600 here. So still in a healthy position in the upper range in that stage 2 zone at the moment, but coming back into the range again for a fourth time. So lots of people wondering whether this is a UTAD or whether this is just a backup after a jump across the creek. So potential for a last point of support maybe if it is, but it could still turn into a UTAD here like we've seen multiple times before. So if it does rebound and then fail to push back up again, then we'll be looking to see how it holds around the moving averages. But if it is just a last point of support and pulling back into the range here, we come back down to the daily chart, so 50-day moving average still a fair bit below here, so still plenty, 5% move back towards that would bring it quite far back in low if it does come all the way back down to there. So ideally we want to see it hold and rebound in a fairly short-term position here. So one way you can look at these kind of charts on the pullbacks and how to gauge these, at the moment we're at 39.5 0.5% above their 20-day moving average, so moving into the lower half of the chart there. One way you can look at it, you're doing pullback entry points after a stage 2 breakout. So this was your stage 2 breakout area in this. So is that you can consider the stages on a lower time frame. So if you look at this, you can see the action, the standard stages, and then if you drop down to lower time frames here, you can see on the 195 minute, which is half of a daily chart, you can see we've been in stage 2 and we're just starting to roll over here into a potential stage 3, and it could even be just testing to 4 there. So whereas in the 2-hour chart here, it's already rolled over into a stage 4 downtrend here after being in stage 2, rolling over, it's in stage 4. On the 1-hour chart, you can see it's still in stage 4, so rolling down and into stage 4 for a little while now here. And then on the 30-minute chart, you can see it's attempting its first change of behavior here, so we could start to mark this up as a potential base structure. So we've got a selling climax, automatic rally, secondary test. We could be in phase B of a really tiny base on the local here. So if it can develop through here, potentially spring, you could be moving out into a new stage 2 on this lower time frame in a few days or so there with that one, if it did start to build a base here and turn around. But at the moment, we have to drop down to very, very low time frames in order to get stage 1 type structures. So on the 2-hour and 195 minute, etc., we're more likely stage 4 type territory here. So you can see with the bands here, we're in the neutral zone at the moment, so we want to see it hold in here and build a base here, because if it does start to drop below that, then there's potentially short-term downtrend as we saw through these kind of areas. So at the moment we want to see this hold, base, rebound. So the lower time frames can help with looking for those turning points, as then you're not guessing where the support is, you're waiting for that base to form at some kind of lower time frame and then start to build through the time frames. So right, the VIX, we've also had a test this week back up to the recent pivot highs, which we've been watching. So third test of that at the moment, so this clearly a significant level in the zone in the near term. If it does start to push through this, then that would be a major warning sign. Clearly gets back above the 200-day moving average. That's where it's more significant and more negative. For the moment, if we do start to break above where it's stopped 3 times now, then that would be a change of behavior. So at the moment, holding in there, still in a mildly positive position, but needs to start to drift lower again in order to get more positive.